What should the world expect from a bank? Perhaps a bank dedicated to meeting the challenge of change. A bank that honors the business environment and the natural environment with equal passion. Providing people and businesses the tools and insights they need to succeed. And offering people and communities the resources to flourish. A bank that recognizes that economies fluctuate, but values don't. And never forgetting, our only ambition is to help you fulfill yours. What would you like the power to do?
Good morning, good afternoon, good evening. My name's Deepesh Patel, editor at Trade Finance Global and host of the podcast Trade Finance Talks. Today's Tradecast, sponsored by Bank of America, is brought to you live virtually at Sibos. So welcome to our LinkedIn viewers, our YouTube live, Facebook, and those joining us on the Zoom webinar. Thank you very much. Today, I'm delighted to be joined by Geoff Brady, Head of Global Trade and Supply Chain Finance at Bank of America. We have Madhav Goparaju, Head of Digital Transformation of Trade and Supply Chain Finance at Bank of America, and Chris Doroszczyk, Head of Strategy and Business Development for Cloud at IBM. Thank you very much for joining us. So it's been quite the journey when we talk about supply chain disruption, particularly in and around COVID and the COVID pandemic. It's had a huge impact to lives and livelihoods around the world. But I think here today, we want to discuss how the pandemic has changed trade and supply chain finance for the better. How has that also helping us work with our MSMEs who are always looking for access to trade, receivables, and supply chain finance. So to get started, Geoff, I'm going to hand the mic over to you. So if you can give a quick introduction to us, tell us a little bit about yourself and where you're from and what you do at Bank of America.
Thanks, Deepesh. Great to be back. I know we've done one of these Sibos before. I'm Geoff Brady, and I'm the head of supply chain and global trade at Bank of America. I'm based in New York. I've been at Bank of America now for about 3 years.
Madhav, over to you.
Thank you, Madhav Goparaju. I lead the digital transformation for trade and supply chain finance, for Bank of America. I'm based in Chicago. Been with the bank for a couple of years now. Background both in banking and consulting, so looking forward to it. I've done these at Sibos a few times before, so looking forward to it.
Great, and Chris, over to you.
Good morning, Christopher Doroszczyk, Head of Markets, Strategy and Business Development, IBM Cloud. Very grateful to be with such a prominent audience and across the world. I look forward to the topics of trade finance and security that IBM provides across the world.
Thank you very much. So now we will go into our introduction. So we have people joining us from all around the world. I can see some of our viewers in India, in America, in Bangladesh. Welcome to you all. Geoff, at a very high level, what's the current state of global trade and how has this affected trade finance?
Well, I think, if you think about the current state, you'd be remiss not to start with the fact that we are sort of in hopefully what is the tail end of a global pandemic. And I think, we saw a number of things coming out of that. And I think, first and foremost, you saw a lot of support for trade finance around the world, both from governments and multilateral institutions, et cetera. You really got a sort of a firsthand view of what the physical supply chain means to global commerce and how disruptions will affect that. And last but not least, that the need for trade finance, I think, was exacerbated and accentuated. And I think to a large extent, trade finance products, both the more traditional trade finance products and things like reverse factoring, supply chain finance, et cetera, export agency finance, have acquitted themselves really well. And I think as you think about ways that we've been able to sort of sustain global commerce through the pandemic, I think a lot of what we do in trade finance has facilitated that, which I think is a good story. And I think along with that, we've had while we've been in this pandemic, we've had the usual sort of roller coaster of ups and downs of the economic cycle. What some would describe as sort of a bit of a global liquidity crisis. I think you saw a lot of activity on the corporate side in their revolvers, what to do with their deposits. There was a lot going on in the banking space. And then, of course, I think most evident probably is the need for mobility and digitization. I think that was really highlighted over the last 18 months or so. I mean, and I know sort of my great co-panelist, Chris Doroszczyk, would sort of agree, this was a time where we really had to sort of take a good hard look at how paper affects us, how not being digital affects supply chains, and right down to, from a finance perspective, but also from is there enough inventory on shelves perspective, right? And if we thought things like digitization were nice to have, I think we learned over the last 18 months exactly how important that stuff can be when it actually comes to sort of on the ground brick and mortar commerce. So I do think, trade finance has again, I think acquitted itself nicely. I think the need for it has become only more urgent. And I think the need for it to be more efficient has become more urgent, which I think creates an opportunity for us in the market, Deepesh.
Yeah, absolutely, Geoff. I think really, keeping food on shelves, keeping trade flowing everywhere all the time for everyone has been the absolute critical priority. And I guess taking that point, mentioning Chris, what's your view as a technology vendor? How has both the pandemic and also the global supply chain disruption that we continue to see impacted yourself and your role at IBM?
Interesting question. The big piece is to supply confidence in digital supply chain of data, right? And supply confidence in the ISVs or the vendors that provide services to trade finance. So we look forward to providing that confidence in both compliance, security, and ability to execute both vertically in trade finance and horizontally across the whole host of industries.
Thanks, Chris. And Madhav, has supply chain disruption, be that the shortages and delays to the transport of goods, or even the wider pieces around nearshoring or reshoring, has that disrupted supply chain finance programs at Bank of America?
Actually, interestingly, no, it hasn't. And just to kind of connect back to what Geoff was saying, what we've seen from corporates as they've kind of lived through the pandemic has been, the first piece has been the shutdowns and sort of and where for classical trade, which has been increasingly very paper-based business, so the need for digital data to drive important decision making becomes that much more sort of prevalent, and that kind of put a light on why we need to digitize sort of that piece of the business, if you will, right? Then you had the second piece, which is, existing programs that were run for many of the suppliers. And the focus has been, how do you strengthen those relationships? And some of the things like Geoff mentioned, keeping more inventory at hand. That means, looking for, increased ways of sort of financing mechanisms that now have mushroomed. And how do you kind of ensure that, the suppliers at the tail end are getting the right kind of financing that they need? And as COVID has sort of kind of evolved over the last 18 months, the other big piece that kind of a light has been kind of focused on is really the lens of ESG. So making sure that the supply chain financing, at the beginning you mentioned some of the SMEs and stuff. So is the right financing getting to the right suppliers who truly need it? Because some of the weakest links in the supply chain network, which broke down. It became quite apparent that those are the pieces that needed the financing. So I would say, like, a lot of these things got more transparency. And from a bank perspective, the need for supporting our customers, I think the urgency only increases across, all of these dimensions, if you will, Deepesh.
Yeah, thanks, Madhav. And as you can see on the chat, the ESG is something that a lot of people are talking about, and what was once put on the back burner is now very much the most important issue to deal with. Geoff, question from the audience: supply chains have been put to the test over the last 12 months. What, in your opinion, are some of the biggest lessons to be learnt from this period?
I think it's a really good question, and I think for us, it really is about creating a sort of a digital end-to-end process. And I think that is really critical going forward. I think, historically, the focus has maybe been on, putting the resources towards being able to sort of do payments more quickly or to be able to facilitate them in more places. I think now we really see the value of having an end-to-end digital process. So I think the lesson learned is, the friction in the process of financing a supply chain slows down the supply chain. And, it lowers economic value. There are greater challenges to capital. All of these things impact the ability to deliver goods and services. And I think the biggest lesson learned coming out of it is, it's for a lot of our clients and for corporates, it's not really about just dollars and cents anymore, i.e., this is going to be an expense. This is going to be something that's going to create a little bit of pain for us because we're going to have to go through some switching costs, and we're going to have to go from sort of implementing what is today a very manual process, but we can live with it, to a more digital environment. I think it becomes now a little bit more urgent for them because they recognize that it's a disruption in their supply chain. Not being digital is a disruption in the supply chain. So I think, we've got a little bit of momentum towards not just the banks, the fintechs, the providers like IBM and others who are moving towards that sort of solution, but also the corporates themselves who are saying, it's not good enough just to say, if this is going to save me a dollar or $100 somewhere, then I'll do it. But if it doesn't, I won't. I think now they can really sort of visualize where that disruption and how that friction is impacting them. And I think, again, it's given us a little bit of momentum. But that's what I would say was the biggest lesson learned of the last 18 months. And a lesson, by the way, we're still learning.
I think it's important to say here that trade finance really has been at the forefront, right, of the modernization and digitization efforts, right? And the three words come to mind, right, as you spoke. One is elasticity of the platforms that need to be in place to deliver that disruption. Two, to providing the capacity to all the parties involved on the platform. And three, economics, right, which is the biggest part of our business here collectively. So not only for the banks, for the suppliers, for everyone involved, IBM, and also the vendors.
Chris, I like the point you made about the connectivity around all parties in the transaction, and I think that manifests itself in a couple of different ways. We think about the connectivity in terms of being able to sort of make payments. That's the first thing I think that banks would think about. But it's not just about that. It's about also the security of the transaction. I think that's also important. So if you've got a multi-party transaction, which by definition trade finance tends to be, you want to make sure that the connectivity that we have, whether it's electronic or otherwise, is a secure connectivity. And I think that's also part of what the global environment is reacting to after the 12 to 18 months of the pandemic. But it's a really good point you made around the connectivity.
Yeah. So the other thing I wanted to add, sorry, Chris, go ahead.
No, please, Madhav. Apologies. We have a lot to say, all of us, on the topic.
I was just going to say, like, look, for trade, as you guys were saying, it's been an ecosystem and many players across many jurisdictions, and some of the issue for kind of digitizing the entire value supply chain has been because of the many parties in many jurisdictions. And sort of one bright light coming out of COVID has been this need to drive. And so some of the regulatory agencies and local agencies are also pushing for this digital sort of transformation and digital data, and that'll hopefully spur a lot of the stuff that that Geoff is mentioning and sort of Chris has mentioned, right? Because in the past there has been an impediment, at least in some of the value components of this chain, and it kind of broke down, and you would have 60% digital and then 40% paper. But hopefully now coming out of it, we're able to advance that need a much more, given what we've seen over the last 18 months, if you will.
Thank you very much. So I think we've discussed about that there are about 6 key words there, and I'm going to change the entire schedule of this live tradecast to focus on those 6 words: elasticity, capacity, economics, connectivity, security, and ecosystem. So that's our introduction. Let's go on to our first section. So in our first section, we'll talk about access to finance. And I think talking about the capacity piece earlier and also ecosystem, I think that kind of brings that all together. And Geoff, how does BOVA respond to unprecedented fiscal support from government, possibly competing with bank debt offerings, an increased risk of lending to MSMEs due to the pandemic, and also a decline in global trade volumes? I mean, look, did the bank lend less?
It's a really good question, and we'll start with the support from governments. I think first and foremost, I think that's been a really important boost to the global economy. I think, and I think probably intuitively we don't think about it as competing with banks. We think of it as complementary, and we actually think of it in a couple of different ways. I think from a financing perspective, I think it's complementary. From a the other part is the operational perspective, where the governments, and in some cases multilateral organizations, et cetera, aren't necessarily set up operationally to be able to fund multiple parties like this. So banks actually have to end up sort of using its rails to run the liquidity through its systems to be able to provide this financing. So I think that's where it becomes important for us on a number of different levels, the complementary financing, but also, the operational know-how to be able to sort of distribute the funding to where it needs to go. And I mean, it's going to sound like a one-track event here, but this is where I also come back to, you'd asked about the lessons learned. This is yet another reason why being digital, lower friction is increasingly important for the bank community, because the banks have, to a large extent, been called upon in many cases to operationalize that funding and support that's coming from the governments and the multilateral organizations. So I think, that and along that, more of that will get to the MSMEs if there is lower friction on the mechanical side of that funding distribution. Banks in particular inevitably are required to do levels of diligence on its counterparties, and that often will require some friction and some sort of mechanical portion of our throughput. And that's where, the more efficient we can be on that side of it, the more then we can start to distribute more of that funds to a broader environment, including more of the MSMEs. I think to a large extent, we always think about the trade finance gap, right? And we think about how the funding is not necessarily always getting down to the MSMEs who need it. Yet on the other side, there are tens of billions of dollars of capital in the market that is trying to get to, quote, trade finance in whatever capacity that might be, portfolios of receivable, et cetera. So the question isn't really a supply and demand. It's more of a facilitation question. How can we get that capital to the MSMEs and just the places that need it in general? And that's where I think the facilitation, the operational side, the mechanical side of what banks do becomes even more important, perhaps even more important than the funding side.
Yeah, and I think that operational piece is quite important. And Madhav, how can this help customers reduce? Because ultimately, it's all around the cash conversion cycle, right? It's how do you get your customers to? How can you help your customers reduce days payable outstanding? And what can Bank of America do to help clients there?
Look, the interesting thing, with what Geoff also mentioned is, what you also see with this evolution of sort of the, strengthening sort of the working capital and the cash conversion cycles that you're talking about. Also, the market has evolved. So now you not only have just banks being party to these transactions directly with the corporates, but you also have fintechs that are more aggressively, in this space, capturing and originating some of the data. You have non-traditional banks, maybe it's private equity players and others who are also tapping into the same data. So the pool might be bigger, but it's a lot more fragmented. So, what that means for, banks like ourselves is, how do we frictionless sort of connect to many of these pools to be able to provide, sort of these financing mechanisms, right? I mean, because what has evolved is, before it used to be maybe one single pool with a program with a single corporate connectivity, but depending on the sector, that has become multi-bank, maybe some fintech, some banks. So for us, other than being able to provide the financing, it's how are we able to provide frictionless connectivity to corporates in many different ways, because the asset origination pools are not in one place. So the faster we can connect, and as banks, historically we're not agile. We're, it takes us longer to connect to multiple connectivity points. So that's where it becomes a lot more important. How do we partner with players like, IBM or other fintechs to be able to, tap into these pools to be able to provide, the various sort of financing tools like you're mentioning, right? So it's kind of like this confluence of both the digital and the actual sort of, the financing needs have sort of converged, and it's more and more important to be able to address both. Otherwise, you're going to get left out of the pool, basically.
And Chris, I know, what we can see right now is a bit of a digital island, as Madhav quite rightly pointed out. You've got multi-banks, you've got corporate clients, they want to kind of connect to everything. I'm going to ask you a more challenging question, which is, what about the smaller banks that can't necessarily afford IBM services, perhaps, to allow for that connectivity? How do you operate in a way that is open for everyone, enabling us to solve that problem as a whole rather than as individual bilateral relationships?
That is a very tough question. However, IBM platforms are there to provide services, to enable, to lower the operational challenges and to lower the friction. So our cloud, FS Cloud, has been designed to bring that confidence and to bring the consumption-based like topics to forefront, and to enable everyone to participate in this, in the benefit of our cloud and our technology estate. So what we will do going forward, right, is not only help the banks, big banks like B of A, but by enrolling the fintechs on our platform becomes open to any participating bank, so they could participate in any transaction on consumption basis. So there is no huge capital spend to enter the digital world.
Yeah, I think that's a really good answer, and I hope we can see that come to fruition. And Madhav, I assume also some of your corporates have responded in various ways to the pandemic. What have you seen? Have they been more demanding? Have they requested specific product updates? And how has Bank of America responded from an SCF perspective?
I'd say it's look, it's multi-dimensional. So, one is, as we talked about, they themselves are evaluating the overall sort of disruption, and so nearshoring, offshoring, what components to move. That then drives their needs for digitally transforming their own supply chain, and how and that kind of then has an impact on their banking partners and other partners to provide digital data to them so that they can consume and make better working capital decisions and the like, right? So by them advancing their digital agenda really forces the banks also to be on the front foot, and in this case us, much towards sort of Geoff was mentioning earlier on. So this kind of forces the agenda to be much more digitally nimble and kind of accelerates, that process. I think the other piece that's come to the forefront is with so much focus on digital and data, clearly there is a focus on APIs. So how can we, connect with our corporate, banking partners, more through this, sort of API consumption-based business services, if you will. And that can, that then drives, other challenges that both sides need to address, which is kind of cybersecurity. How do you kind of protect the data, in flight between the corporates and us? So these are kind of the questions that our corporates are asking of us, and they're looking for us to kind of provide the necessary comfort that we are at the forefront of it and that we are addressing. And I'd say the other third, sort of the evolving space beyond APIs, what we've kind of termed it as really embedded financing. So we want to remove the friction even further. So APIs are better than historical legacy platforms, but they still require like a mini technology project on the corporate side, on the banking side. But the embedded finance is really, how do you really even further simplify the friction and removing that and embedding really within their core procure to pay process in their ERP at the origination, so that they can connect with a partner like Bank of America to simplify, right? So there's many ways in how we're kind of evolving and looking at some solutions and sort of better connecting with our corporate partners, if you will.
How do we protect data in motion? We look at ourselves as the mechanics, right? How do we bring the entire technology complexity to a usability format, to what you asked Deepesh before, right? To anyone in the supply chain, whatever the supply chain is. And I think the concept that we at IBM rolled out is the concept of hybrid technologies, hybrid cloud, hybrid mainframe, hybrid ability to access the ISV network, and most importantly, to protect that data in motion with a set of different technologies, from mainframes to cloud to satellite, that reaches the entire global network of banks, suppliers, and anyone who wants to participate in this network. Because supply chain is really, in trade finance, exemplifies really what the world will look like tomorrow. So Geoff and Madhav really are at the forefront defining what the digital supply chain will look like for almost every institution, every Fortune 100, 1,000, 2,000 clients out there.
Thank you very much, Chris. So I think now, to kind of close that introductory part, we'll go into a little bit more detail on technology in this next section. So now we're going to talk about technology, and I encourage our listeners to keep asking questions using the hashtag #CybosTradecast, and we will endeavor to get them answered by our brilliant panel. So Chris, everyone talks about the acceleration of digitalisation in the trade finance space. What's been happening, and how has the pandemic accelerated processes? And can you perhaps give any examples of this?
I don't think we have the time to give examples. I think, again, supply chain has been on the forefront, right, of defining what digital is. And for everyone in the supply chain, literally, right? How do we interact? What tools we need? What does it mean to be digital for everyone? And what do we need to do to enable, right? How does that interconnectivity work for everyone? So at IBM, what we focus on, number one, is to bringing on a collection of technologies, ours, our partners, and everyone, to enable this process to take place. But the most important things that are coming out are, number one, security, number two, compliance. So we get the confidence, right, in the digital supply chain. But then some of the newer technologies like low code, no code, right? An ability to onboard digitally. What does that require, right? Also model-driven designs to enable to visualize the entire trade life cycle and see what this looks like where you are in a given point, to give a visualization to every participant, what needs to be done. Finally, I think the last piece is artificial intelligence, allowing us to anticipate, right? Not only the issues, but anticipate what the client wants to do and give the client options at every single point of that cycle. So for us, and then taking a look at back, how do we step back and what technologies apply to each one of those? Again, IBM and non-IBM. We're in hybrid space, enabling our big clients and small clients as well.
Absolutely. And Geoff, question to you. How do you go about choosing platforms? And there are many banks on this webinar right now. So it'd be good for you to give a bit of advice. And can you talk about any of the current projects that Bova are working on within the digital trade and supply chain finance space?
Yeah, so there are a couple of sort of philosophical boxes that we want to check right up front when we think about a platform. What we'd love to do, I think, in the banking community is we love to stick with what we're good at. And, what we know that we bring to the table is we bring sort of the balance sheet, the ability to finance. We bring an investor pool to a large extent. And then also we bring connectivity to corporate clients all over the world. And I think, a natural corporate connectivity that we bring. So I think, that's something that the banks will always do really well. And I think, everywhere in the world, which is a sort of a home market for a group of banks, they have a sort of a core group of clients where they have the influence, the connectivity, and sort of the need to be able to create this value for them. So I think, when we think about that as the first thing, then we think about a platform or how we can facilitate that. And I think, you use the word ecosystem and you're sort of opening 6 sort of themes. And I think, overused as it may be, it is an ideal word to describe what it is that we are trying to achieve, right? We're trying to achieve connectivity to an ecosystem. So the way we always approach sort of a platform or a solution is we want it to be ubiquitous, right? We want it to be something that will work because everybody does it, if everybody does it, and not sort of force our clients to sort of bet on one horse, if you will. We'd rather not say, here's a platform that we own and operate, please log into it and transact everything here and then go back into your own platform and do what you do. That doesn't seem very ubiquitous for us and sort of and naturally creates that sort of friction, that mechanical friction that we keep talking about. So, we really are looking at an adaptable, malleable ecosystem where we can facilitate transactions for our clients doing the things that we do. They need to be finance transactions, loan transactions. They need to be able to connect to our sort of loan records, which are, regularly scrutinized by our regulators and overseers. So, all of that needs to happen, but it also needs to be sort of user friendly for the client. So that low friction environment, that efficient digital paperless sort of environment, and one that can connect to the ecosystem. So that's what we're really looking for. And then, as part of that, clearly scalability. What we'd like is, as I said, an adaptable and a malleable sort of environment where we don't have to sort of say, we've got a platform, in 5 years, we're going to create a new platform, or we're constantly going to have to build out a platform. What we'd really like is something that's more of sort of some architecture that we can be fluid with, right? And we can sort of build and even sort of tear down as we go where needed. And, Madhav talked about a few things in flight. We're working with our great partners at IBM around sort of, a couple of different parts of our supply chain. One around being able to do things that have traditionally been very, very paper intensive in a more digital way, right? So those of us in trade finance sort of, some of these things need no introduction, open account processing, et cetera, some of the transactional type business that we do. And how can we sort of create something that's more digital and then sort of allows for a more frictionless transaction where we don't need to be so mechanical with how we achieve it. Madhav talked a little bit about sort of our embedded solutions where we can sort of allow for an environment in which our clients could perhaps transact in their own operating system, right? And then connect back through whether it's API or whether it's blockchain, to be able to sort of allow the bank to be able to record those transactions. And then, there's certainly the operational component of that as well, where we've got sort of things like compliance checks, et cetera, that we're doing with AI. And I think that's also a real part of, our solution and how we think about the platform and the environment and how we transact. So all those things follow a common theme. Here at Bank of America, we sort of call it operational excellence, and always on is sort of the buzzword that we have. And the way we think about that is, all of this stuff needs to be, it needs to be scalable. It needs to be malleable. It needs to facilitate a wide body of transactions. It needs to be able to sort of check all the right boxes with the bank regulators, et cetera, the things that we need to do. And then we are very open to achieving this with partners, right? So this is where we look to the fintech community. We look to our great software vendors like IBM and the consulting services, et cetera, to be able to help us achieve this stuff. So, we're not looking for one thing, Deepesh. We're thinking about it very holistically, I think, as we think about our platforms.
Yeah. So look, Deepesh, one thing I wanted to add, as you think about sort of technology and the challenges for our business, right? I think what you see is really the two businesses, which is supply chain, which we've talked quite a bit, and the traditional trade. They're both at very different evolution of cycles of digital acceleration or transformation. For the traditional trade, the issue always has been there is a part of the business that's just paper intensive. And, so when you talk about digital, are you able to digitize the entire cycle, or are you digitizing only a component of it? But then what the COVID has shown is if you just digitize a component and the rest of it is all paper intensive, your problems never really go away. So the question for that part of the core business really is, how are you able to partner with technologies that can bridge the gap between taking the paper, digitizing the paper, making it much more data-driven, digital data-driven, and then completely digitizing the pieces that you can. And then on the supply chain finance side, which is already a very digital business to begin with, it's really about tapping into this various sort of corporate origination pools, which is basically connecting to the core. So very different ways of thinking about them digitally and technology, and where you want to partner to kind of move the needle forward from that perspective.
Thanks very much. And good to distinguish between those two pieces there, Madhav, and actually that was the kind of question I had in mind for you. Chris, a quick question from the audience. Given the accelerated drive to digitally transform, how do you see cloud computing enabling this evolution for corporate banking within GTB teams?
So as I look at it, my B of A partners have been very articulate and described well the entire operating model, right? And the components of operating model. What does the client service model look like, and the multi-channel access? What is the digital omni-channel interface, if you will, right? What is the data-based processing? Again, digital data-based processing, intelligent automation, and what are the set of global platforms that we need to take on? So to answer that question, right, Geoff and Madhav have really gone down the entire set of platforms, right, and said, well, how can that be enabled? What we do at IBM, we've captured all of that in our set of not only compliance and security environments, right, but how do we standardize all 5 pieces of that platform? Right? And how do we deliver that to the community, such as B of A and its clients, and beyond, to enable B of A and its clients to grow? So our underlying platform, FS Cloud, has been designed to accomplish all 5 components of the debate that we've been having here. Everything from operating platform from a client level, all the way through multiple flexible, right, but standardized platforms, right, that could be securely threaded together.
Thank you, Chris. I think that makes a lot of sense, and also hello to all the fintechs joining us here at the Cybos at this Cybos Tradecast. I think it's very important to get that perspective both from yourself, Chris, and also Geoff, in terms of who you're looking at from a fintech and trade tech partnership perspective. Something else that's been mentioned in the comments on this Tradecast is all around cyber threats, and I guess, Chris, I'll ask this question to you. We've seen an increased focus on cyber threats and a focus on public versus private clouds for financial data. What are the key differentiators in this place?
Well, to us at IBM, this has been at heart for multiple years, right? From the time we rolled out our Z machines, right, which enabled specific cryptography. So what Geoff and Madhav had mentioned, right, is an ability to secure data in motion, right, at any given time, and the concept of bring your own key and keep your own key, right? So as the data moves around, we have been able to design the cryptography to really protect this, not only when it emanates from our machines on-prem, right, our machines which run perhaps even the private clouds, then to public clouds, which we are actually focused on industry cloud. So we're focused on having a very specific financial services cloud, which has over 286 different regulations, which give that confidence of really stemming the cyber attacks, right? And I know many of us get attacked, and we don't want to talk about, or we don't want to put down any of our competitors, right? But from our perspective, at heart for us, is to make sure that any transaction is compliant and safe, right? And that concept of cryptography is something that we bring to us in every step of a journey, not only from what we do, but also the great ISV community that joined us here on the webcast, right? We help them to bring that same confidence to all their clients. So it's this cryptography that enables us not only to transact on our machinery, but also to extend it via a product that we have called Satellite to our great partners out there, to anyone that participates in this entire supply chain of data.
Thanks, Chris.
Hey, Deepesh, one of the things, this becomes much more critical and important as we move forward, because traditional trade, as an example, right? There's so many pieces of paper today that then become digital and stored digitally, and ecosystem players accessing this digital environment. So, whether that is sitting in some private cloud, hybrid cloud, partnering with a partner that has the right set of sort of cyber, controls and stuff becomes even more important because you're moving to this much more sort of digitally native environment, if you will, right? So that becomes a heart of sort of what banks like us, have to evaluate as you sort of begin on this journey, which is very different than just for purely APIs, which is sort of data in motion, but this is much more comprehensive because the ecosystem nature of the digital data in itself.
Yeah. Just to follow up really quick, Deepesh, on this, about 3 years ago, we at IBM set out on a journey. How would we construct this hybrid cloud environment? And one of our foundational clients is B of A in the US and globally. We have other foundational clients, our anchor tenants, such as BNP Paribas, Bank of Tokyo, Mitsubishi. We got together and said, what are the global set of rules really that govern this, right? And we put together among our foundational anchor clients this set of global rules that will help us to secure and bring together an environment that we could all enjoy and ensure that everyone from the banks to fintechs to the suppliers to manufacturers, everyone grows, right, and is able to transact in a way that benefits them.
Yeah, Chris, actually, your colleague Palm Sanger, talks about these ideas of these open rules, standards, etc., interoperability. I think that the standards piece, particularly some of the work around the ICC DSI, is really important to take into consideration there. Geoff, where are we at the moment in terms of what's your opinion on international standards and standardization of data in and around trade and supply chain finance?
It's a great question, because I think, it's the boring part, but it's the necessary part. And I think, where we've really seen some good collaboration in the last 18 to 24 months has been around the standards. And I think, the ICC, BAFT has done some really good work around this. We've seen the WTO weigh in. I think, we're always sort of juxtaposing two things. One is how we can sort of facilitate some standardization that will allow for greater adoption and allow for greater sort of ease of transaction, while at the same time, and very fairly, we're also working with the global regulatory community to make sure that there are the proper controls around all of these things. And, we're always sort of doing those two things concurrently. And, hopefully in a more perfect world, they all fit together very sort of uniquely. But, and I think that comes back to where we are able to create some global standards around things like digitization, some legal sort of issues, jurisdictional issues. Right alongside of that will be the data that sort of comes with being able to track the things that we're doing, and then sort of put those back to the overseers, the bodies that oversee the banks, the regulators, et cetera, so that we can sort of create standards that will facilitate the transaction, and then the transactions themselves will be sort of uniquely able to be vetted and controlled in a way that will sort of allow for, that global sort of transparency in some way that will sort of be the great facilitator. So I do think, Deepesh, I think the last time we spoke at Sibos, this was something that we had talked about. It continues to be something that we talk about. I think we've gone down the road a bit on the journey. We like the engagement that we've seen from the ICC and the WTO and BAFT and others, because I think it really helps to coagulate all of the sort of parties and the voices together. And I think that's been uniquely beneficial to us. So I think we expect to see that continue as well, but still very important.
Great, thank you very much. So now on to our last section of the Tradecast. So now onto our last section, a kind of future view here, and we encourage you to send through your questions to the audience. I mean, I'm surprised no one's asked a question about cryptography yet, but I'm sure that will come. Geoff, Bover recently decided to research the coverage of cryptocurrency and digital assets. What motivated this decision?
I mean, I think there is always for us, a priority is being on the forefront of being informed, and not just sort of, being a passive sort of being informed party, but also, leading the conversation to some extent. And I think that's why, without sort of making any definitive step one way or another, I think the idea that research and information is very important. We always want to make sure that that conversation is a part of something that we're thinking about. Obviously, it's something that is relevant in the world today. So we're going to do our due diligence around it. We're going to make sure that we have a view on it one way or another. And if it is going to come into play as something that will impact the financial community in a way that we need to sort of react to, then we'll be ready to do that. But I think that's the nature of that now. Deepesh, we'll see how it progresses.
And Chris, what's your view on digital assets and cryptocurrency within that trade and SCF space?
I look at a number of evolving topics that have to be considered constantly, right? Whether it's crypto, blockchain, right? And how do we accommodate that in a world, right? Evolving world. From an IBM perspective, I look at to make sure that our platforms are able to be resilient and provide that. Number two, that they are redundant, right? So that we don't have any massive outages. And if, God forbid, something happens, that we could restore stuff. So we always, and those three things, the triple R's, are really what the regulators that Geoff described, right, really look at, right? How can you make sure that you provide a platform and anything new? Because, today it's crypto, blockchain, right? But if you look at the evolution, how far we've come, right, on the digital journey, there'll be a number of new next steps, number of new ISVs, ideas, and we really need that, right, to continue to grow in trade finance. And we, from IBM perspective, need to continue to keep up with that. And again, as Geoff, to borrow Geoff's words, right, we want to be boring. We want to be secure, resilient, redundant, and we want to make sure that we restore if anything goes poorly or anything happens, that we're always there. So from our perspective, bring on the innovation and we'll keep up with the pace.
Thank you very much, Chris. And I think that's a really good roundup of many of the topics we've discussed here, and also many of the things we should look forward to and be prepared for. The boring stuff, really. And Madhav, what's next for the Trade and SCF team?
Look, for us, it's exciting times because we're laying the digital foundation for what's to come next. And we touched on a lot of these pieces, whether that is leveraging, picking up on these digital assets, but, leveraging the blockchain technology to drive and solve for some of the challenges that our corporate clients are looking for us to solve for, leveraging the digital, bridge between pure paper to the acceleration to all digital, getting to a world where the supply chain procure-to-pay network is much more driven by digital data, because once you get there, I think you're much more evolved from being a pure transactional processor to really being able to advise our clients, being able to kind of take it, and decision-making and financing needs kind of completely evolved. So I think we're at the beginning stages of that journey. And, as a key global player, I think we look to kind of shape how that space is going to evolve. So, from where I'm sitting and the direction that kind of Geoff has shared with us, I think we're super, charged about sort of where this is all leading to over the next couple of years, and how we can kind of shape. Because just lastly, you touched on earlier, what are some of the other financial institutions who are not maybe at the scale of what we are, and at Sibos, many of them are looking to hear sort of lessons learned, what to get, and so what we are sort of paving the path, hope, obviously can help shape and bring many more players into the space to kind of address the, various financing needs, for the corporate clients at large globally. So exciting times.
Absolutely exciting times ahead. And Geoff, just kind of one final closing question for you, for those listening in that are looking to explore digital transformation, which means many things to different people. What are the key considerations, Geoff, you would advise others, and things that they should think about and prepare for over the next 12 months when it comes to digital transformation?
That's a really good question. I think be prepared for sort of to discuss data. I think that's really important. Access to data, be prepared to work with multiple parties, right? I think, we need to be collaborative. So if it's a digitization journey, then, I think it's sort of an old school view of, I just want one person in front of me and then let you handle the rest of it, is probably not going to work here. You're going to want a table that's filled with different perspectives and different people that sort of bring different expertise. So, whether it's an IBM or whether it's a fintech and a bank, whether it's, a consultant or whomever, we're looking for that intelligence wherever we can find it. And I think if you're, a corporate client or you're a bank and you're going to go on a digitization journey, that's the important thing. Go make yourself smarter and be more informed. And I think the way to do that is to be prepared to work with a number of different counterparties, really smart people that are doing smart things, and to be pretty agnostic about where that comes from. It's certainly not territorial. That would be my piece of advice, Deepesh.
Thank you very much. And I think on some of the key things we've discussed about always on open excellence and data in motion really resonates well with those key points. So just to kind of summarize, and it's been really good to have the three of you on today. I think I'm going to go back to those 6 words that we discussed and brought up by Chris at the start of the session, which is really around elasticity, thinking about many to many, and thinking about how we can adapt quite quickly to the ever-changing market. We talked about capacity, so the ability to collaborate with others and think about things from that perspective. There's the economics. There's not only does this work from a business model perspective, there's also how do we create an environment that's open to everyone to use and open to everyone to benefit. Then there's connectivity, and we talked about some of the key facets and the key good features of blockchain and distributed ledger technology, and also APIs. The importance of security, and I think that really comes with good partnerships. We've seen lots of cyber attacks and various bits there, and we need to be able to respond quickly. There's ecosystem as well, in terms of access to technology and access to finance, and we talked about the need for building standards, preventing the digital island problem that we talk about lots, and the idea of that multi-bank solution. So Geoff, Madhav, Chris, thank you very much for joining us on this Tradecast. It's been an absolute pleasure. And to our audience, please do send us questions by email to tradecast@tradefinanceglobal.com, and we will endeavour to get back to you with answers from the panel if we've missed anything. Thank you. Good evening and good night. And data in motion really resonates well with those key points. So just to kind of summarize, and it's been really good to have the three of you on today. I think I'm going to go back to those 6 words that we discussed and brought up by Chris at the start of the session, which is really around elasticity, thinking about many to many, and thinking about how we can adapt quite quickly to the ever-changing market. We talked about capacity, so the ability to collaborate with others and think about things from that perspective. There's the economics. There's not only does this work from a business model perspective, there's also how do we create an environment that's open to everyone to use and open to everyone to benefit. Then there's connectivity, and we talked about some of the key facets and the key good features of blockchain and distributed ledger technology, and also APIs. The importance of security, and I think that really comes with good partnerships. We've seen lots of cyber attacks and various bits there, and we need to be able to respond quickly. There's ecosystem as well, in terms of access to technology and access to finance, and we talked about the need for building standards, preventing the digital island problem that we talk about lots, and the idea of that multi-bank solution. So Geoff, Madhav, Chris, thank you very much for joining us on this Tradecast. It's been an absolute pleasure. And to our audience, please do send us questions by email to tradecast@tradefinanceglobal.com, and we will endeavour to get back to you with answers from the panel if we've missed anything. Thank you. Good evening and good night.
What should the world expect from a bank? Perhaps a bank dedicated to meeting the challenge of change. A bank that honors the business environment and the natural environment with equal passion. Providing people and businesses the tools and insights they need to succeed. And offering people and communities the resources to flourish. A bank that recognizes that economies fluctuate, but values don't. And never forgetting, our only ambition is to help you fulfill yours. What would you like the power to do?